Investors are hoping President Trump's upcoming trip to Asia could lead to trade truce with China. Joining us right now with his insights is Alex Wolf. He's the global head of macro and fixed income strategy at JPMorgan Private Bank. And Alex, thanks for coming in.
Thanks for having me.
This seems like one of the issues on a macro level, at least, that's had the most potential to impact markets. I mean, we've been on a pretty steady climb higher, but when there are issues raised with China, the second largest economy in the world, it can't help but have ripple effects. What do you look for in these talks? What would be the good news coming out of it? What would be the bad, and how would that impact markets?
Sure. So as they go into these talks, it's hard to have very high expectations, I think, given what we've already seen so far in terms of tit for tat, going after each other's economy through the different choke points that each country has. This will likely be another data point in the negotiations that we have been seeing. So I think on the positive side, you would like to see an outcome where they have discussions over some of the key issues, whether it's fentanyl or soybeans or especially rare earths.
Rare earths, I think, would be the big one, right?
And that's an area where they can come out with some agreement of China to continue selling and potentially buy soybeans and some positive signs. But by and large, don't expect any kind of grand bargain of sorts. I think especially given what we've seen up till now in terms of ratcheting it up pressure on each other.
So any sort of a truce, if there is one, you would read as a temporary truce?
More likely than not. More likely than not. A lot has changed from where we were in the previous trade war. I think.
What's the previous trade war?
Well, 2017, 2018. Okay. So if we go back to the first trade war, a lot has changed, and the key thing that has changed is China's use of leverage and China's development of tools of leverage. And that has made it clear that the U.S. administration will have to also give up some concessions.
Meaning that they're willing to use anything and everything and play dirty and not play by the rules. And so as a result, you're going to have to change your strategy?
Well, I wouldn't phrase it that way.
It's guerrilla warfare to an extent.
I wouldn't phrase it that way. It's more that the rare earth choke point didn't exist the way it does now. And that is a very crucial tool that China has. And they've shown they're willing to play that card.
So what does China want on the other side? They want semiconductors? Do they want no tariffs? What is their goal?
I think when you think about long term, both sides have somewhat of a similar goal at this point. It's reducing their dependency on each other.
Right.
While at the same time maintaining the choke points that they have and maintaining some aspect of trade and business. At the end of the day, both sides will need each other's economy. They need each other's markets. You can't completely decouple or cut ties, but they do want to reduce their dependence on each other for key goods. For China, that's, of course, semiconductors, but also even food. And for the U.S., it's clearly rare earths at the moment.
Do you think the dependence of both of them on each other will basically force them to stand down and the markets can kind of look through this? Is that your guess?
More likely than not. I think both sides recognize it's somewhat mutually assured destruction, to use the old Cold War phrase, and that they have these very key choke points. And I think neither side wants to see a harsh, sharp decoupling or anything that would cause a sharp economic downturn or even sharp ripples in markets. I think both sides are incentivized to prevent that. So you see this kind of truce kind of muddle through while at the same time still pursuing those long-term goals.